For decades, we all pretty much operated on one simple assumption, that goods would always get through. Yeah, sure, there were delays, bumps in the road, but the system itself, we thought it was solid. Well, today we're going to break down why that assumption is completely, fundamentally broken, and why we're not just in some temporary crisis, but in a permanent, full-blown restructuring of global trade. Let's dive in.
You know, this one sentence from the Supply Chain Intelligence Bulletin, it really says it all. The key thing to get here is that waiting for things to get back to normal is a losing strategy. It's not coming back. All those playbooks we had for managing temporary problems, they're basically obsolete because the very foundation of global logistics has changed for good.
So what's really driving this great restructuring? Well, the first, and maybe the most obvious driver, is the death of reliable, easy global transit. And nothing shows this better than the recent energy crisis.
So in response to huge shipping lanes like the Strait of Hormuz getting blocked, the International Energy Agency did something unprecedented. They coordinated the largest release of emergency oil reserves in their entire 52-year history. We're talking 400 million barrels. This was like the world's economic firefighters pulling out their biggest possible hose to put out the fire.
I mean, a historic, coordinated global intervention on a scale we've literally never seen before. That had to work, right? It had to calm the markets and fix the problem.
And this is the punchline. Nothing happened. The market basically shrugged. And that sent a terrifying message to every boardroom on the planet. The old tools don't work anymore. You can pour all the supply you want into the system, but it's completely useless if you can't actually move it to where it needs to go.
This really gets to the heart of what analysts are now calling the transit problem. See, we have enough oil, we have enough goods. What we don't have anymore is a guarantee of safe passage. When you have major sea lanes getting blocked at the same time, it's no longer a supply problem you can just solve with reserves. It's a deep, physical, geopolitical logistics nightmare with no easy fix in sight.
Okay, so let's shift to the second driver. This one's a lot quieter, but honestly, it might be even more profound. While blocked shipping lanes are the loud, obvious crisis, the one hiding in plain sight is the weaponization of critical materials. We're talking specifically about rare earth elements.
And if you think this is some abstract future problem, think again. It is happening right now. Honda just posted a staggering $1.7 billion operating loss, and they explicitly called out the risks in their rare earth supply chain thanks to China's export restrictions. This is the price tag of dependency, and it's very, very real. Now just take a look at these numbers. The scale of dependency here is just jaw-dropping. China controls 91% of all the refining of rare earths, and an absolutely mind-boggling 94% of the permanent magnets that are essential for everything from EV motors to defense systems. It's not an exaggeration to call this a total monopoly. So for any executive out there thinking, well, we'll just pivot and build our own, this slide is a massive reality check. Even if you throw tons of money at the problem, a new mine takes, on average, 8 years to get going. A new refining plant, more than a decade. I mean, projections show that even by 2040, China is still going to dominate the market. This is a deep structural dependency that's going to be with us for a very long time. So let's be crystal clear here. Honda isn't some outlier. They're a warning shot. They're a preview of coming attractions. Any company, especially in automotive, electronics, you name it, that designed their products assuming they'd always have easy access to these materials, well, they're now facing a fundamental threat to their entire business model. Okay, so things look pretty challenging, right? But smart companies are not just sitting around waiting for the sky to fall. They're responding. And the first, most powerful response isn't about building more ships. It's about building more intelligence. It's about creating a digital immune system with AI to fight back against this constant chaos. Just look at something like last-mile delivery. The old way was so static, right? You'd plan all your routes the night before and just hope for the best. And that led to failure rates of like 5 to 8%. The new way, it's completely dynamic. AI platforms are recalculating the best route every 60 to 90 seconds based on what's happening right now, slashing failures to under 1%. It's about adapting to chaos in real time, not just planning for a perfect day. And get this, the economics are just on another level. An autonomous robot can deliver a package for about 6 cents. A human courier costs $1.60. That's a 26 times cost advantage. And this isn't just about saving a few bucks. It's a strategic shield. It lets companies absorb all the hits from rising fuel costs and labor inflation that would otherwise just destroy their profit margins. So AI gives you a digital defense, but that's not enough. You also need a physical one.
And that leads us to the second major response. Companies are de-risking by moving their manufacturing a lot closer to home. It's not just a trend, it's an imperative. And believe me, this is not just corporate talk. The data is clear. A full 77% of supply chain leaders have already moved some of their sourcing away from China. The great restructuring is happening as we speak. If you're not acting, you're already falling behind. So, where is everyone looking? Well, a massive consensus is forming. An incredible 87% of leaders are planning to launch nearshoring pilots in Mexico or Central America. And why? It's simple. Shorter supply chains that mostly rely on trucks, and trucks don't have to worry about getting through the Red Sea.
All right, so when you put it all together, you've got these huge permanent drivers and these powerful new responses. It all points to one thing. It's a clear mandate for structural adaptation. We're past the point of small tweaks. This is about completely rethinking where you put your capital for a brand new era of global trade.
So what's the playbook? What should you be doing right now? First, investing in AI-driven logistics isn't a nice-to-have tech upgrade anymore. It's a non-negotiable hedge against crisis. Second, you've got to accelerate those nearshoring plans. The business case for North American manufacturing has never been stronger. Third, immediately, and I mean today, map your exposure to rare earths. You cannot manage a risk you can't see. And finally, build up your safety stock. 12 to 16 weeks for your most critical components. I know it goes against everything we learned about just-in-time, but resilience, not efficiency, is the new name of the game.
We'll leave you with this final thought. The supply chain that got your company to where it is today, it was designed for a world that was predictable, cheap, and frictionless. That world is gone. It doesn't exist anymore. So the only question that really matters now is this. What is your plan to build a supply chain for the world we actually live in today?